Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Monday, July 28th, and today we are talking about one of the biggest Bitcoin OTC deals ever. Before we get into that, however, if you are enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. All right, friends. Galaxy Digital has sold 80,000 Bitcoin in one of the largest OTC deals ever. Early on Friday, on-chain analysts noticed a large quantity of Bitcoin on the move from Galaxy to a range of large venues like Binance, OKX, and Bitstamp. The funds were linked to the ancient Bitcoin wallets that woke up after 14 years earlier this month. By Friday afternoon, the transfer of funds was completed, and Galaxy put out a press release to discuss the trade. They announced that they had successfully executed, quote, one of the largest notional Bitcoin transactions in the history of crypto on behalf of a client. The Satoshi-era Bitcoiner had cashed out $9 billion. That's 1.5 times as much Bitcoin as the German government sold this time last year at about 5 times the dollar value. Galaxy didn't include any information that could identify this whale or their intentions, merely stating, the transaction was part of the investor's broader estate planning strategy. Galaxy also posted this press release on the Bitcoin blockchain using op-return, which was a nice flourish to a historic event. Most commentators seem to assume that the investor exited to cash rather than transferring the funds straight back into an ETF or a Bitcoin treasury vehicle, but realistically it doesn't matter that much what happened to the money. The news flow reported this as a sale, and the narrative that someone sold Bitcoin could have been incredibly bearish. Remember, the German government's Bitcoin sale sent the market down almost 20% last summer, and that was with a month-long selling strategy that attempted not to move the market. This Galaxy sale seemed to come together within the last month and was executed all at once, albeit to multiple counterparties. It moved the price around 3%, and that gap was immediately filled back in. Joe Consorti wrote, this news would have wrecked the market 5 years ago. Today, it barely moved. Stress test complete, Bitcoin is ready for the big leagues. As the sale didn't crater the price too badly, some were able to see the lighter side of how it all played out. The day prior, Galaxy CEO Mike Novogratz went on CNBC and said, there have been some sellers that have come in and slowed things down. He added, the narrative of Ethereum is really powerful. There's not a lot of supply of ETH. I think Ethereum outperforms Bitcoin in the next 6 months. DJ Nape tweeted, so Novogratz went on CNBC 12 hours ago and said ETH is going to outperform Bitcoin, then drove back home and dumped billions worth of Bitcoin. Now from there, we got a ton of poorly informed takes on exactly what had happened. For clarity, not that this audience particularly needs it, Novogratz wasn't selling his personal stash or Galaxy's Bitcoin, it was a sale on behalf of a client. And there was also a notion getting around that Galaxy hadn't hedged the transaction and were just trying to market dump Bitcoin on a quiet Friday night. We don't know for sure, but that seems fairly unlikely. The Bitcoin did flow into regular exchanges like Binance and OKX, but that doesn't necessarily mean they were dumped on the market. Those exchanges could have been buying the Bitcoin for their own inventory. More likely, they were being used as a custody and compliance partner to facilitate the deal on a client's behalf. The use of Bitstamp in particular looks like a settlement agent rather than an exchange, given the exchange has fairly low volume these days. It is certainly possible that Galaxy was firing into empty order books on a Friday night, but that's not the only explanation. After fighting it out in the comments all weekend, Alex Thorne, Galaxy's head of research, said, this is a website where millions of people bloviate about things they know nothing about. Some may seem like experts, but I'm begging you to realize most are actually idiots speculating without access to real information, out of their depth, or all of the above. One of those takes without access to all the information came from trader Tyler Neville, who wrote, for what it's worth, I traded for a $100 billion fund, and moving a 1% position would sometimes take weeks given the liquidity in the stock, size of the company, and the footprint you'd leave. It is incredible the market took 9 billion Bitcoin of supply so well and shows the depth of the Bitcoin market now. Super bullish for the sovereign reserve thesis. Regardless, the timing and speed of execution was super suspect even if a lot was OTC. It's so fishy that someone who held Bitcoin since its inception punches out in under a couple of weeks during July's summertime vacation, while every market was breaking out to the upside. Totally agree there was massive slippage costs, but I bet the client ordered the execution this way. No way Galaxy traders would recommend dumping Bitcoin this way, especially in the middle of the night with US markets closed. This felt like some sort of psyop on market liquidity. Now, while the fishiness of the sale is up for debate, the Bitcoin market's ability to absorb this sale was clearly incredible. As Tyler mentioned, this is a big deal for sovereign reserves where the liquidity to enter and exit in size is a huge factor. One of the big lingering questions, of course, about this sale is who actually owned the Bitcoin. We've had no hints from Galaxy, and on-chain analysts don't have anything concrete. Ki-Young Ju, the CEO of CryptoQuant, had what was to many the current best guess, writing, The recent transfer of 80,000 Bitcoin, dormant for 14 years, came from wallets originally hosted by MyBitcoin. The wallets had been inactive since April 2011, before MyBitcoin collapsed in a hack that July. It likely belongs to the hacker or the anonymous founder known as Tom Williams. It seems Galaxy Digital bought the Bitcoin from them, but I'm not sure if they did any forensics. Ju didn't include any on-chain evidence, but Connor Grogan of Coinbase agreed with this analysis. The funds were transferred from MyBitcoin 3 to 4 months before the hack, so the tracing isn't all that conclusive. It also doesn't imply Galaxy should have known anything in particular about their customer, as it's not even clear these are stolen Bitcoin. But if this was some hacked Bitcoin from 2011, that's an interesting twist in the story. This is not a situation like the Bitfinex hack or the Mt. Gox collapse, where customers lost millions that turned into billions. A thread from the Bitcoin Talk forums in 2011 tried to tally up the damage at the time of the hack. Around 24 forum posters reported the loss of 27,000 Bitcoin, worth about 380,000 at the time. Assuming there were more people using the exchange, it's plausible that 80,000 Bitcoin could have come from the hack. The vast majority of the reported losses were from an early Bitcoin influencer called Bruce Wagner, who claimed to have lost 25,000 Bitcoin. None of this is to say the hack wasn't important, or that it's not a big deal if Galaxy were handling stolen Bitcoin, but we're talking about a six-figure loss spread across dozens of Bitcoin users. It was nothing like the multi-million-dollar hacks we saw in the following years as Bitcoin skyrocketed in value, which impacted thousands of people. Ultimately, this is an interesting rabbit hole for any Bitcoin historian that wants to take a second look at that particular hack. Today's episode of The Breakdown is brought to you exclusively by Grayscale. Grayscale is almost certainly a name you know. They've been offering exposure to crypto for over a decade now and offer over 20 different crypto investment products, ranging from single asset to diversified to thematic exposure to crypto and the broader crypto industry. They have long been innovators at the intersection of TradFi and crypto, and one of the benefits for a lot of us is that Grayscale products are available right through your existing brokerage or IRA. Now, of course, investing involves risk, including possible loss of principal. For more information and important disclosures, visit grayscale.com. Go to grayscale.com to explore their full suite of crypto investment products and invest in your share of the future. More broadly, the sale is driving the discussion of OG Bitcoiners giving up on the project and cashing out. There were lots of takes about the need to hold onto your Bitcoin forever, but just as many saying it's fine to cash in your chips. TXMC Trades was particularly fired up, tweeting, "Imagine flipping $15K into $9 billion and letting it ride for purely ideological reasons." Someone literally said something like, "How will they protect themselves from inflation if they convert to fiat? Bro, it's $9 billion, are you daft?" Now, just to represent one of the opposing takes, Bitcoiner Mike Munz wrote, "Counterpoint, you've watched an investment into an infant grassroots movement become a multi-trillion-dollar asset with its most significant 2-year stretch in its history. Every major institutional player is now at the table. You own the best performing asset since nearly the beginning of its existence. And you decide now you need to sell $9 billion worth of it into a pile of dog doo-doo fiat currency? No one needs $9 billion, not when Bitcoin's starting to become accepted collateral. There's no chance liquidating all of that at one time makes any sense whatsoever. Are they buying the Golden State Warriors in cash? Doubtful. No human diamond hands for 14 years and says, I want cash now, 9 billion of it. No one. Maybe the biggest hint is that Galaxy said the sale was for estate planning purposes. Anyone with kids and a fortune in on-chain crypto understands how tricky it can be to make sure they can access it after you're gone. That goes double for ancient Bitcoin wallets that are literally stored in a DAT file on a hard drive that predates seed phrase recovery. There are plenty of scenarios where it would make perfect sense to cash out and rebuy an ETF just to have that peace of mind. But underlying the discussion is the idea that many OG Bitcoiners have simply lost the conviction they once had. Scott Melker has been discussing this point for months on our Friday shows. He's been hearing from a lot of OGs who are disenchanted by the institutional adoption and are taking this opportunity to exit through Bitcoin treasury companies. This weekend, Melker commented, "Bitcoin is amazing, but it's obviously been co-opted to some degree by the very people it was created as a hedge against. Many of the most ardent early whales have seen their faith shaken and have been selling at these prices." Plenty of prominent Bitcoiner and crypto folks, however, chimed in to point out that Wall Street adoption doesn't undermine the benefit of censorship resistance. Podcaster Bram Kanstein wrote, "Explain co-opted. Bitcoin is for enemies, that's the point. There is no other way than through." Still, it's clear that for some OGs, Bitcoin has become a trade rather than a movement. Dave Weisberger, the co-founder of CoinRoutes, commented, "The irony is that there is no path to a Bitcoin standard without adoption by the public through the legacy institutions controlling the fiat system and the distribution of OG-held Bitcoin to those entities. So, everything is on track." The conversation, however, has clearly struck a nerve and raises the question of what the next decade of Bitcoin actually looks like. For the first decade and a half, Bitcoiners were fighting to legitimize Bitcoin as either a payments technology or a store of value, but legitimization was a major goal. At this point, though, we're basically there. Major financial institutions and the US government are on board. Is there still an ideological mission of disrupting the fiat financial system? Or is Bitcoin just going to be another store of value asset? For some early Bitcoiners, that's going to be a sticking point. They came for the revolution, born out of Occupy Wall Street and disenchanted media. And Bitcoin is definitionally no longer the same protest movement it might have been in those early days. It can still be useful and important, and a protest from within, but with BlackRock fully bought in, we're clearly not burning the fiat system to the ground. And for some, that's fine. Matt Hogan, the CIO of Bitwise, wrote, "I get this, but Bitcoin's still pretty revolutionary. It's the first global money backed not by the state and threat of violence, but by logic and community. Respect to the early whales and let's keep building. The world needs Bitcoin more than ever." Now, of course, in reality, Bitcoin is many different things to many different people. For a certain cohort of early Bitcoiners, the project to disrupt the world with digital peer-to-peer money has lost its way. That viewpoint is understandable, and frankly, even more understandable if you're sitting on massive unrealized gains. For others, though, Bitcoin is about being a self-sovereign store of value that hedges against the fiat system. You don't need to believe Bitcoin will take over the legacy financial system for it to make sense. The reality is this discussion will never end. Bitcoin will always represent different things to different people, and when the question is who's right about it, the only possible answer is yes. Still, hold aside the ideology, and the big takeaway from Galaxy's sale is that the market just womp-chomped $9 billion in Bitcoin with barely a hiccup. The price only fell to $115, and we're pretty much back to $120 already. For a certain type of buyer, that demonstration of liquidity is incredibly important and allows them to enter the market in size with a lot more confidence. But technical analysts are a little bit mixed on what this week will bring, predicting a wide range of outcomes depending on whether the 120 level holds. One of the impacts of Friday's drawdown was that liquidity was swept all the way down to 115. That means any move lower won't be amplified by liquidations until we hit 114. Conversely, there's a lot of liquidity sitting above 120,000 that could drive a strong move to the upside if we see some momentum to begin the week. That ultimately will be a question for tomorrow's show. That's going to do it for today's breakdown. Appreciate you listening as always, and until next time, be safe and take care of each other. Peace.